Hello traders, Day Trader Matt here with businesswithtrading.com, doing a trading strategy recap for Thursday the 19th of February. And today was another interesting day in the markets. It wasn't that great of a day in the E-mini trading room. We ended up with 3 trades and pulled a quarter point out of the market. And we're going to get into that. The market just dropped a little bit, gap down to open. And as it's chopping around, the market does come up here, and we decide to get short. And we hold on to that short, thinking that price can break down. It kind of chops around a little bit, finally starts to break down, but it catches some buyers real quick, buys up really quickly, and we end up getting stopped out. It is what it is. Sometimes that happens. So after we get stopped out, what do? You look for another reentry. So, we're looking, prices keeps going up. And finally, up here, we get short. And, we're short, we're watching price. It's starting to get a little bit ugly. So we exchange it for a long over here. And as we're long, we're kind of looking at things. The price starts to jump up, starts to move higher, and we actually get out over here as price starts to pull back down. We get out, and then we go ahead and start closing down the room. As we're doing that, price does come up a little bit more, but we're kind of just watching things. We're already closing. I'm giving my view for what I'm looking at to happen in the afternoon and overnight, and then we can come back and do everything again tomorrow. That's what we do. Day trading, the one thing that separates it from swing trading, a lot of times you are in a trade for multiple days, and that's the goal of swing trading. Today we took a trade and we were in it for maybe a couple hours or something like that. That's not the norm, in the swing trading group. In the swing trading group, usually you're in for a day, 2 days, 3 days. I think 6 months was the longest we were in, something like that, 6, 7 months. And, that was last year to this year. And, but that's what we look for. Day trading is different because every single day, you got to be on point. You got to be focused. Looking at this, we should have probably turned this into a long somewhere in here. But it is what it is. We got stopped out. What do? You have to look at everything objectively. We were able to get short here, but when it started looking like it was going to go higher, we exchanged it out for a long, and we were able to ride most of this up. Price starts to chop around a little bit, and I go ahead and get out. And it is what it is. Instead of looking at this and saying, "Oh shit, man, look at what I missed. I could have made all of this," and feel sorry, and you're like, I could have made over a point today. I just made a quarter point. That's not what we do as traders. And that is really detrimental to your overall P&L, doing something like that. You got to look at everything in context. We've made money every day this month so far. I think one day we might have broken even, but other than that, we've made money every single day. And today I look at it as a scratch day. Yeah, it's up a quarter of a point, which I think it would be a little bit over commissions, but it's just one of those days. As traders, you're gonna have days where after the day's over, you either want to go strangle somebody, go to the gym and just work out till you can't move, or go to sleep. And then you're gonna have other days where you're like, man, today was so awesome. I'm gonna go to the beach and just have fun, or go to the amusement park, or do whatever you do that's fun. Go play guitar, go whatever. Write a poem about the day, whatever you're into. Um, you know, and that's what trading's all about. I wouldn't trade it for anything. So what I am, looking at, once you get your first stop out of the day, it's over with. Each trade is an individual. I guess going to a school, all of the 12th graders, I was once in 12th grade, a long time ago. You look at all the 12th graders, but then you take each individual 12th grader. Those individuals are your trade. The trading day is everybody combined. So once you're finished speaking to one person, you're talking to somebody else, you're not in that first conversation anymore. You're in that second one. You're going for it. And then you go to the third conversation. You're talking to another different person. You're not talking to those first two people anymore. And trading is the same way. Once you're on to the next trade, it is what it is. It's the next trade, and then the next trade. So that's really what you look for. So anyway, hopefully that made some sense to you. Let's go over a trade that we actually exited today. Our corn trade that we took the other day. We're in it from 390, and we took profit right here at 385. Market chopped around a little bit. Last night I sent out a video, which was probably would be around this time, if I had to show it on the chart, but corn closes for a little bit. So it was yesterday evening, late afternoon, early evening, however you look at time. I sent that out and I said, let's move our stop to 386 here. That's what we did. We got taken out. And, we're happy with that. We made 5 points on one side and 4 points on the other side, which equates to 9 points total. On this one, I believe we were risking 3 points initially. And I think corn's $50 a point, so that would be 9 points would be $450. So that's what we closed out. Now let's look at this, a quicker trade that we did, and that was soybeans. We ended up shorting. Where did we get short? Oh, right here. I sent it out yesterday evening. We want to get short at 1,000 and place our stop up here. That's what we did. But I also said when price goes below 995, which it did, we're going to move our stop 1 point down. And that's what we did. Little did I know, though, when price went down, it was going to come straight back up. And that's part of our risk management. So we actually made a point on this, even though soybeans actually did take off and run. In my personal account, I actually shorted up here. It was kind of not enough time to send an email out. Not everybody hangs out in the chat room, so you can't really count a trade that not everyone had the opportunity to jump on. So that's the way I look at that. But anyway, it was a nice move off of that. But it was surprising here. I didn't really think that it was going to come back, but I did know once it gets here, it's either going to continue or it's not going to continue. But to my surprise, it just came up and boom, stopped us out. And the same time that happened, which this was when the market opened, and this was a little bit after the market opened. So we got stopped there a little bit after the market opened. And also this trade, we got stopped a little bit after the market. So we kind of got stopped here about the same time corn got us, and then soybeans got us over here. So it was an interesting morning, to say the least. And it was just one of those times when you look at and you're just like, Wow. What a clusterfuck of a day. But you look at everything relative, and that's what being a trader is. You're not gonna, every day isn't going to be perfect. It isn't going to be laid out for you. If you could learn how to trade by reading a book, there would be a whole lot more successful traders. Trading's difficult, and that's why I'm able to be a trading coach. It is difficult. Something that takes time. And that's why I always say, you have to be passionate. I wrote an article the other day about, are you a passionate trader or are you just an interested trader? Because being interested in trading is one thing, being passionate is another thing. And there are many different things that can make you passionate about trading. You know, and that's one thing that I always talk with to students about. I'm getting off topic a little bit about what the video was meant to be about. But just to add a little bit more, that's what I do all the time. I talk with students. Is trading really for you or not? Maybe you haven't made up your mind, maybe you have. Some people come to me, they've never traded before in their lives, but they think it might help them. Some people come to me, they've been trading for a while, and they're just not able to make money. They just lose money consistently. That's not what you want to do. But the person has stuck with it because they know that they can be successful at it. And there's always an underlying reason why you stuck with it. It's because you really like it. Like, you really get into it. And that's what I work with people on all the time. I'm going to start doing a video series. I'm thinking probably in the next week I might start rolling it out, but things do get pushed back from time to time. I'm still looking for a couple more students to take through the year, and I think I'm going to do this every single year from now on. Is take a couple students under my wing, and I think I'm going to do something that I've never done before, and I think it's going to be quite interesting. It's going to take the risk off of the individual pretty much. I mean, you still have market risk, obviously. You can lose money in the market. But I mean, as far as paying me, I'm going to take that risk off the table. I mean, it's going to be something where, if we decide to work together, that whatever you pay me will be refundable. So after a set number of period, if you're not successful, if you're not doing well, get your money back, and I will have failed. We're going to do something like that. I'm a very, very strong competitor. I don't fail. That's not what I do. I've taught many, many thousands of people how to trade. That's one thing I am good at. I may not be good at that many things, but I am really good at that. I think I get it. Both my parents, but a lot of my family are in the education industry, mostly teaching, and I think that's where I get my gift of gab from. That just being helpful with different analogies and whatnot. But anyway, not to make this video too long, that's what we did today. We were able to come back from the first loss of the day. And a lot of times when you get stopped out, yeah, it sucks. It's not good. But when you get stopped out and the market just starts running away from you, all of a sudden the brain's, where do I enter at? Where can I enter? Where can I re-enter? I need to make this money back. That's not what your first instinct should be. And that's really one thing that I work with people a lot on, is training the brain, setting up your instincts. Whenever you trade, the subconscious mind, the part that you're unconscious of, which is the majority of your brain, especially your brain power anyway, it moves a lot faster than your conscious mind. It does. It's a proven fact. So if you're able to train your brain in such a way where you can just look at a chart real quick and, in a second or two, it's good, it's not good, throw it away. It's good, it's not good, throw it away. Well, then you can do the same thing with the day trading chart. But like I say, your focus always has to be there. Without focus, you're not going to really amount to anything. If you know everything and you're just, getting 2 hours of sleep at night and you're just not able to trade at all, it's just detrimental. So anyway, hopefully what I talked about helps. You can always leave comments below the video. Thanks for watching. Have a great rest of your night, and I'll see you back here in the markets. Thank you.